All right, what's happening? What's happening? Uh, just getting used to the StreamYard. I see something really strange. For anybody, if anybody's there, I uh, I just hit start broadcast, but before I hit it, someone had already typed a comment. I'm like, I, if I'm not broadcast, I guess it goes up to everybody before I start the broadcast. Okay, like why is somebody making a comment before I'm broadcasting? Strange, strange. Let's let's see. Let me begin at the beginning. The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. I'm just a dude on YouTube, okay? Trying to make it like everybody else. Trying to make it like everybody else. Now, I want to emphasize something I just said in that opening statement, and that is consult a advisor. This is the time for you to call up your person from your retirement account, your advisor, plan administrator, if you are concerned about a decline and you want to know where can you go to reduce the damage. If you fear the S&P 500, express that to them and see what they say. Talk to a lot of banks offer some financial planning, so you have some free sources out there. Um, and this is the time to take advantage of that information. This is also a time to zone in on your favorite YouTubers, okay, whose information has done you well and steered you in the right direction in the past. But I want, again, even with that said, I don't want to commingle the two. You have a squad of folk out here who are trained and licensed, and make them do their jobs. Now on the other side of that, keep a record of who's saying what do they believe. This is where the truth is going to be known. Now you're moving into the world of Dollar Will. Everything from this point forward is really just my opinion, and that's like elbows. Everybody's got elbows, and you know what, okay? Now, I am a technical purist. That means how well a company performs in terms of how much they have their product sell, how many people purchase the product, how much money that company's made. All of that information is secondary, if if valid at all. From my perspective as a technical purist, my position is everything that you need to know about that stock that's important is in the price. It's in the price. How the market feels about that stock, it's in the price. It's what people are willing to pay for it. Price is truth. And in times like this, where the price, where the stock, the price action, as we call it, the price movement on the chart, when it no longer makes sense to the fundamental crowd who think that everything has to line up according to a rational thesis, that this company has sold so many of a widget, so their stock should go up and it should keep going up, as long as the sales are there. It sounds good, but that's not how markets work. Markets work on expectation. Okay, and then there's a law of supply and demand, even within the price itself. Okay, that's when we get into the realm of the technicals. Okay, there's a finite supply of stocks, and there's a finite supply of money. Actually, although we know about the government printing money and all of that, there's a typical amount of money that is routinely invested in the markets. And when that supply of investable dollars is exhausted or severely depleted in one direction, the prices normally, naturally, uh, reverse, retrace. Okay, so that's the big picture. And so on other videos, you can go to the first video that I have on my channel. I've been, just talking this since I uh, started, and I'm not going to repeat it all, but my big technical thesis is in the very first video of my channel that I posted in January of 2018, and everything from that Bible is still active. So I provided a technical view of I believe I was using the Dow Jones at that time, but it is, let me just say that represents the market, okay, just as well as the S&P 500. I had provided an analysis that went back more than 100 years. Yes, you heard that right, 100 years. And using that information, I made a projection up to now to where we are, and it said then that we were in a trouble area where a major reversal would happen. Correction, reversal. It depends on what scale you're talking about. But so none of this is surprising or shocking to technical traders. Okay, so let me get back on point. Today, we're looking at the S&P. We're in this trouble area, and you gotta, seeing a whole lot of weird price action, price jumping around. What I'm using today is a site called investing.com, and you see these things keep popping up. It teaches you technical analysis along the way. Get the free game that I'm giving you here. I don't, as you know, I don't put up a lot of videos because I'm trading. Okay, I don't have I'm not, I guess maybe I'm not good enough in my time management to put up a lot of trading videos. So, and when I'm not trading, I'm putting up content that's exclusive to my Patreon group. So, but today I said I got to make some time with the 800 down day. I need to let you guys know that now is the time for you to be getting information from your licensed advisors, okay, at your bank and your credit union, or maybe you've hired one, or you've been thinking about hiring one. Get one. And for my biased 2 cents, you want to know, do they practice technical analysis? If they do not practice technical analysis, in addition to fundamental analysis, again, I don't care about fundamental analysis. I'm going to tell you, everybody licensed is like excellent at fundamental analysis. That's fine. It's as long as they add technical analysis to it. If they do not trade technical analysis or use that to supplement their fundamental analysis, run. You want to know that they incorporate technical analysis in their information that they're giving you, in their guidance they're giving you. You want to know that, So I forgot my point. I'm kind of spinning. There's so much going on. This is like a bittersweet time for technical folk. It's the happiest time for us because it's a lot of money to be made, but it's a scary time because a lot of people are in pain. And what you're watching, it's like watching a train wreck, and you can't tell people get out of the way. So it's that bad. But there's money to be made. Let me speed up because the market opens in 9 minutes. All right. So we got the S&P 500 here. I'm just gonna step through some stuff that kind of makes the point. This is from yesterday, which is going to be irrelevant in 10 minutes when the market opens. Energy was the worst performer because the dollar is reversing. The dollar is about to continue its head higher, and it has a lot higher to go. And that'll be another video I'm going to do later. And so we see energy and metals and materials are the primary places that get destroyed when the dollar is gaining strength. And so that's the big story. What's the big macro story is what's going on with the dollar and the bond yield issue. And it's related with the interest rate. It's all related. And everything else is kind of flows from that. We see the least damaged thing is utilities. And my personal view is this is where for people who want to be bullish, this is a place. This is a you don't just blindly buy. You bring up the chart and you check it out. People in my Patreon group, they know how to do that. I do not think that real estate is a safe place, although it's up here. It just hadn't died yet. It's getting ready to die. It's definitely gonna die. There's no way it's gonna survive this. Okay, Staples, another good spot. You know, so your sin stocks, we call them. You know, I'm going to be doing another. I'm going to get deeper on that on other videos. So stay on this channel. But primarily, these are the two spaces for now. That's although you see utilities having a decline and staples having a decline, these are going to flip and start going north in a violent way. That's my opinion. They're going to go north, go up in a violent way. This is going to be the spot. Whereas these other areas are going to go in a prolonged decline. You know, maybe wiping out, maybe wiping out a decade of gains. This is serious stuff we're talking, okay? All of these others, including IT, okay? Especially consumer discretionary. This is your retail sector, your stores. You know, the shopping mall. Who's going to the mall to waste money right about now? Only the idiots. Okay. Even rich folk are saving money. Even rich folk are scared of losing money right now. Okay. Let's see. I gotta speed this up because I got to get on with the markets. This is a 2.5 hour chart. It pretty much is the time frame that gets the whole run in from around Christmas Eve to now. I'm just showing you that we got a support trend line here, and the price is acting crazy right around that trend line because you're seeing right here in graphic form this trend fighting for its life. Is it going to continue higher or not? So going up, making a low below here from the 5th of August, that would be a huge technical flag to the bad side if we go lower than that today. And we're also looking at this is a key support. So this is what all of the technicians and the computers, you got to factor this in here. Computers are programmed to basically run like hell if the price goes below here or these technical levels, because that says that the trend that started this this run is over, is in danger, likely over. So that's what's this is, like I said, this is the run that started in Christmas, this past Christmas. Really, let me see. This is a snapshot of the ETFs. I primarily trade ETFs. I don't buy individual stocks generally. I buy ETFs that are sector based or industry based. I'm a dollar trader, so I'm always looking at things that are most sensitive to the dollar, to good or bad. That rise or maybe it moves with the dollar, maybe it's 180 degrees against it. but that's what I trade entirely. So I never have to know what do you trade. No, my issue is when what does the chart say for the dollar, and then I know what to trade. So I simplified that. Yesterday, um, we the big winner yesterday was China Bull. Okay, that's not gonna last. We'll see. Then Brazil. I'm gonna have to dig deeper into this and see what industries are driving this growth here on that day yesterday. Let's see. I'm still looking at. I'm wondering if this updated. It looks like this already updated to today. Crap. Yeah, so no, this is false. What this is, oh wow, yeah, it flipped on me. Yes, I should have taken a snapshot. Um, this was full of bear market stocks. Today, it's full of bull market stocks because you're getting a sort of a recoil from the decline yesterday. So this stuff is already flipped to show um, what's going on in the market right now. Let's see. So you got natural gas, right? Yes, because the dollar was stronger, so that made natural gas took a beating yesterday. So it has like a bounce today, but later as the day progresses, I would be surprised if these gains are held. It should all turn red again. Especially semiconductors. Yeah. So this is today's information. I thought it was yesterday's. Crap. I should have taken a picture of it. Well, anyway, this TNA is a small cap fund, and it was near the top. And TZA, T Zebra A, is the bear market version of this particular symbol, and it was at the top. It was the best performer yesterday. Okay, for example, if I hit this, wait a minute, no, if I hit decliners, let's see. Wait a minute. Put the worst up near the first. Right. So TNA or TZA, yeah. This is this was near the top yesterday. The number one was this one yesterday. It was so, and it's down today, but it was. We're gonna look at a chart for this. TZA is a volatility play. It's basically a bet against the S&P 500, and it's tied to futures and put options against the bets against the S&P 500. So those were the winners yesterday, and so they're having a pullback today. But provided that this downtrend continues, these are the some of the symbols that's gonna do well. It's these bear symbols. Now these symbols are very risky, and I'm struggling to say what I recommend. It depends on you. This is a time, like I said, you got to get some information and start to get some education. This is not a set and forget. This is no time for hodlers. Okay, so you have to get with someone that's giving you information, get with your education, and just like college, it's good to be in a group. Okay, because there's going to be other people in the group that know things you don't, and you can study together as well as getting professional advice. Okay, and all that information should work together. Your study should reinforce what you're getting from your professional advisor, and this is the time to do that. But this list here is what you're going to see winning over the long term. Okay, so this is what happened. So yeah, TVIX, I'm trying to really kind of speed along because I'm annoyed that the market is open. So this was yesterday, and this symbol TVIX declines when the market rises, and it rises when the market uh, declines. And this was the winner yesterday. Okay, so keep an eye on this particular one. I have a video. I think I call it the Vegas play. Because this thing is risky as hell. Okay, and it, like, for example, in the last year, it's kind of taken a beating. Actually, it's been taking a beating for the entire run in the S&P 500. So that when that S&P 500 was running up, this thing got destroyed. But when it reverses, it's going to go back up. Now, how high will it go? I do not know. Do I think it's going to go all the way back up to this silly number of 250 million? No, I don't. Okay, but you will get a pop of some significant amount. It's the kind of thing that you actually got to watch it. This is one that you watch every day, that you really don't, you get a trend and you get out. You don't put money here and leave it there for a long time. Okay, it's complicated, but somebody will write in the comment section, they want to talk about the decay effect of options and futures contracts as they approach the expiration. Yeah, you can write all that in there, but the bottom line is these you don't hold on to these for a long time. You definitely don't walk away from it without looking at it regularly. But this is going to be one of those places. It was the big winner yesterday, and when in the 800-point decline yesterday, no stock performed better than this one. Okay, so let me go to a daily. I think it was up like 24% or something yesterday. Yeah, let's see. I think it's like 26% for the whole day. Yeah, so yeah, just keep an eye on it. And then another place that has been safe that I don't agree with is gold. I know everybody says gold is a safe place, and we'll see. Okay, right now on this chart, looking at this chart, my Patreon members, they see the problem with this. But I'll just say, looking out on the longer range, we are looking at the entire decline from this is New Mining. It's a big gold mining company. It's one of the large cap gold mining plays. Okay, I could have pulled in one of several, but this is one of the a lot of money is invested in this stock, so it's one of the large caps in this space. And gold in general has been declining since 2011, and we had a retrace here, which is common, and ever since August of 2016, with this particular stock, it has a series of lower highs, so it's been trending down, suggesting, casting some doubt on whether this retrace is going to hold and continue higher. So we'll see. But with the dollar getting stronger, and like I said, I'm going to go into that in another video. With the dollar going stronger, that has a negative effect on gold. Okay, so I'll get into that in other videos. And so today, if this is a weekly chart, let me go down to a daily, so we can look and see that we put in the high in this run since this nice run up since May to this the most recent high that we put in, and we look like we're rolling over. So this idea that you can buy a house or real estate and you can always be safe, you can buy gold and you can be safe, those are false ideas. There's no substitute for knowledge. There is no substitute for knowledge. You have to do the work. You got to learn. and you have to adapt and change with the environment, including the economic environment. So there is no, just buy gold and you'll be all right. Just buy a house. Houses never lose value. You'll be all right. Those are myths. Those are myths. There's a right and a wrong time to do anything, you know. So I'm gonna stop it right there. Um, Today in the market, you're gonna see a little recoil, but if towards the end of the day, and especially by the tail is going to be Friday. Let me just say this right now: the tail is Friday. Okay, the way the psychology works in markets is when people are fearful, when people are greedy. Let's start with the greedy side of the emotional scale. On the greedy side of the emotional scale, people are afraid to lose money, afraid that they're going to miss out on profit. And so when that in that mind state, people leave their money in the market over the weekend because the market usually pops on a Monday, and they don't want to miss that pop. The market will pop like at the open, and if you're not already holding the stock, you miss out on it. So in a rising market, people leave their money in there in the market on a Friday over the weekend, hoping to get that pop on a Monday. So they're afraid that they're going to miss out on making that money. But in a downtrending market, people are afraid of losing money, so they get out of the market on the weekend. They don't trust what's going to happen. They're afraid that the market is going to open up lower on a Monday after hearing all that bad news over the weekend. So how the market closes tomorrow will say a lot about the psychology or the mind state, the sentiment of big money. Okay, do people feel comfortable leaving their money in there over the weekend or not? So I'll have more to say on that on Friday. But so in uptrending markets, it's common to that it'll close. The market will close up on a weekend, and in downtrending markets, it'll close down on the weekend. Okay. Let me check and see if I got any comments over here. Doug, okay, what's up, Doug? Salute. Okay, Money Mike. All right, Money Mike in the house. Super Triz, okay, brother, yeah. It's all right, Devin, what's happening? What's happening? Cashmatic. All right, all right. Okay, okay, Cashmatic, you want to hop on? Is that what you're saying? Oh, you want the Patreon link? Okay, well, type in Dollar Will on Patreon. I ain't got the link handy right now, but go to Patreon, type in Dollar Will. 2 L's, dollar. Will is 1 L. So let me take this off. Let's see. Anybody still there? Looks like y'all probably bailed on me. But listen, I'm gonna go ahead and end this, and I'm gonna come out with some other stuff. Breaking down the dollar a little more. Like I said, I really wanted to get into what happened yesterday, but I was like, like I said, busy trading and trying to, seal off this money. But there's some opportunities out there. See, the problem or the issue with the news, folks know I worked in media for several decades, so I know the mindset on that side. News is whatever is new. Okay, dog bites man, it's not news. Dog bites man every day. Man biting dog, that's news. Okay, so news, if you think the news represents reality, the news is like a freak show. It's a freak show. So it's real, but it's like it's disproportionate in its presentation of reality. So and with regard to the financial news, telling you all of the devastation in the market, all of the things that's declining. Well, that's man bites dog. So they have to tell you that, but that's not the whole story. Some money is being made somewhere else. Everything is not going down. Most things are, probably 90%, but for as far as you and I, what we need to know is who is winning and why. Okay, and I became a technical trader because I used to be a fundamental trader. And when the market, when that dot-com bubble burst in the late 90s and the market was going down, and I gave back like $250,000 that I gained, up from 50,000. And I wasn't even 30 years old yet. I thought I was on my way. Okay. But nothing from the fundamental camp told me to sell. They kept telling me to hodl. And I hodled right along with them and lost everything. And I was pissed. Okay. And so I left the market for a while. I was just really disenfranchised. I mean, like, distraught and confused. I wanted to know what happened. I did everything right. I subscribed to Smart Money, Money Magazine, all of that stuff. Okay. Kiplinger's. I had it all. I read it all for years. Okay. I used to believe all that crap. And then I said, somebody made money. Who made money? And what did they know? What do they think? What's their philosophy? And so I started researching. Once I figured out the right question to ask, I started getting the right answers. And when I started coming upon the people who were winning or who had won, and they showed, they would say words that I had never heard before, like the technicals. I'm like, what does that mean? The support and the resistance, and they was talking all these technical terms. And so I started. We didn't have Google at the time, or some Netscape or whatever was back in the day. I'm searching these terms, and then I'll come upon these sites where they would teach people how about technical analysis. Like then there was one year there was a CNBC had a stock trading challenge. And I knew just a little bit of technical analysis, but the little bit I knew got me in the 1%. I'm like, wait a minute. There was like several million people in that contest and professionals. I'm like, how is it that I'm trading and I'm performing in the top 1% with just this little bit of technical analysis? And then I would get into stock trading. There was a site called Wall Street Survivor. It still exists right now, but they changed their focus. The stock, it had it's called Wall Street Survivor. They have a more of a fundamental slant right now, but back in the day, they had fundamental style investors and technical style investors, and they had a contest, and you could employ either style or a combination of both, but you had to declare what your trading style was. And they had a leaderboard where you could see how people actually performed. And this contest this was like more than a year. So you could see how people, and they broke down the leaders by the week, by the month, by the quarter, by the year. And the technical traders were always the ones leading it. Out of the top 10, you might have maybe one or two fundamental style investors or traders, and 8 of them would be technical. I'm like, whoa. Or most of the fundamental traders would make about 15 or 20%, while the technical traders would make like 1,000%. I'm like, whoa. So when I saw that with my own eyes, and remember, I'm coming from a fundamental bias, okay, fundamental style bias. When I saw that and that game, I said, I've been wrong. I've been wrong. Somebody gave me the wrong religion. And so I became pretty bitter at that point about, the whole financial media, the whole financial education in America, how we are allowed to go through school and, till we're gray. And or you can go to school, become an adult, turn gray, and nobody tells you how to handle money within capitalism. That how is it that we're in capitalism and no one tells you how money works? So we were set up. So now I'm just this bitter technical purist. cringe when I hear on television, they're telling people, just hodl. Well, over here, I'm telling you, learn, learn. Listen to who's saying what, write their names down, come back in a month, come back in a month and see what they're saying. Watch them, squirm, you know. So, watch the money. So what I do or talk about routinely is, we look at where the money is actually flowing. When I'm on the Brain Trust, when I'm able to get a chart segment in, we talk about how the money, where did the money go? Who made money this week? Who lost money? Who made money? And you can look at that from a weekly perspective. You can look at it from a quarterly, yearly perspective. And when you get in the habit of doing that, it puts that daily, the fear that you're getting from the news, the financial news channels, it puts that in perspective. This is not the time to be fearful. You have to be proactive about your money right now, because the S&P 500 is your retirement account. That everybody's retirement account, our options if at work are so limited in these retirement accounts. You pretty much the only really growing option you have in these accounts is something pegged to the S&P 500. It might have a different name, but if you look at the description of it, it's large cap stocks, and if it says large cap stocks in it, it's the S&P 500. Okay, so when you see that thing going down, that's your dream of retirement going down. Okay, so now, for those of us that I'm 55, for those of us that are in that age group, if you think you're going to retire, this decline is going to probably keep you working till you die. If you miss this opportunity to get some information, you're going to work until you die. Okay, just to make it plain, you ain't never. If you're not, that's if you can work. That's if age discrimination doesn't do you in. So if you're older, or even if you younger folks, get your parents to pay attention. This is the time to go to your parents and make sure that they're getting financial advice. Okay, again, go find advice at your bank. At your financial, there's a financial advisor associated with your retirement account at work. Make sure that your parents are getting this information, because as much as a lot of the millennials or younger folks are leaning on their parents for financial support, well, if your parents go into a financial crisis, where you gonna lean? Where you gonna lean? So, I mean, I'm gonna stop this right now, but I will put some more stuff up about the dollar. I have to catch up to what's going on with the prices right now. Peace.